So good afternoon and welcome to today's webinar with Mirriad. I put a poll on the screen asking if you are a shareholder in the company. It'd be great if you could complete that. And we'll just have that on screen for a few moments while we wait for everyone to arrive. And then I'll hand over to Stephan and David. So just bear with us for a couple of seconds. It certainly looks like from the initial poll response, we have a majority of shareholders with us today, around about 75–80% are shareholders. And as I said, I'm going to leave that on the screen as more people arrive. I know we've got a lot of questions and I received a few already, but just to let you know, if you do want to ask a question, there's a Q&A box at the bottom of the screen and you can type questions into that. You're all currently on listen only mode, but as I said, if you do want to ask a question, please type the question into the bottom of the screen. We are delighted to have Stephan Beringer, Chief Executive, and David Dorans, Finance Director, with us today, and they are going to provide an update on the company following the successful fundraise. The formula is a presentation that lasts approximately 25–30 minutes, and then we'll handle all questions at the end. So without further ado, I'm going to hand over to Stephan to start this presentation. Stephan.
Thank you, Alex, and good afternoon, everybody. So I'm Stephan Beringer, CEO of Mirriad. Joined the company in 2018 with a 30 years background in the media and advertising business. David, maybe you introduce yourself real quickly.
Yeah, hi, I'm David Dorans. I'm CFO. I've been with Mirriad since late 2015. I have a background in broadcasting technology and media buying.
Thanks, David. All right, so let's start and dive right into it. And most of you, of course, know probably everything about Mirriad that is there to need to know. For those who don't, so just as a quick background, we're a company that in a nutshell has the ability to digitally insert products and brand messaging into entertainment content, right? And the history of the companies really goes back to, let's just say, in the early teens, so 2013, 2012. It won an Academy Award for brilliant work for the movie industry, The Black Swan. You might have seen that film, so you're seeing the scene here. And basically that phenomenal technology at its core that allows to insert any kind of image into an already existing footage on video or movies or films or television, whatever, was really taken forward, a platform built around it to make it accessible to advertisers. So what I'd like to do now is just to run the latest version or the newest version of our Mirriad video that really captures very, very well the things we do, and those of you who've seen the older versions will also immediately spot that there's been some quite significant developments. So let's go for this one. Okay, so let's dive into this and talk a little bit about why this is really an historic moment in the world of media and advertising. And most of you have seen these figures that talk about the issue in terms of the problem that advertisers have nowadays in terms of reaching audiences via the traditional means of advertising, especially television advertising and video advertising. And there's on the left-hand side, you see a couple of stats that basically all tell the same story, which is, well, nobody wants to look at ads, and most people try to skip. And what you're seeing also is that people just go more and more into the subscription streaming services to avoid advertising and have actually great entertainment without interruption. And this is a very, very important trend we'll capture on the next slide. So in a nutshell, you know this, we are a solution that actually really can resolve this problem in terms of delivering a great viewing experience on one hand, then delivering value to advertisers and creating a new revenue opportunity for those who own and distribute content. And again, just to remind ourselves at what, the size of the prize we're looking at here, and by no means we're suggesting that we will ever capture the whole piece, but just looking at the United States, the 3 biggest markets in Europe and China, the annual spend in terms of video and television advertising is a staggering $135 billion a year. And obviously this is the core market that we are after in terms of trying to cut a nice share out of that pie. So as I just said a second ago, in terms of the key trends, one thing or two things are really remarkable, and they have clearly been accelerated through the pandemic and the fact that we are all sitting somewhere at home and not going outwards anymore that much. So the one phenomenon is definitely the media consumption, and you can see on the left-hand side this very steep increase in terms of the hours of media being consumed by every individual, going up, from 12 hours 24 to 13.13. And just, I don't have it here on the stats, but fact of the matter is that actually video entertainment is the top ranking by far in terms of what is actually being consumed, music being the second, and then third, and way lower down is like social, emails and stuff like that. So no, email doesn't count as media, but social. The other phenomenon is on the right-hand side, and that is really, really exceptionally interesting to observe now, is that with all the players that have come in terms of the streaming services, we all know Netflix, we all know Amazon, but now Disney is in there, Viacom is in there, NBC is in there, and most of these suppliers or providers actually are in the streaming game with more than one service, right? And so what is happening is that there's a very, very constant trend in terms of people subscribing to more and more services. And it is forecasted that by the year 2024, on average, people will have more than 5 subscriptions. And that is very important for us to understand, because it does say that the market, the streaming market, is becoming ultra competitive. And so the battle for subscribers or the battle for viewers is defined, of course, through great experiences, great content. On the other hand, the content cannot be paid for only by subscriptions, we know that, running out of steam, and cannot be paid for by traditional advertising, because that would basically be totally counterintuitive to the promised experience. So again, it is very clear that we're coming in here at this sweet spot. So the Mirriad opportunity, and I really like to stress this aspect or this view over and over and over again, because it's really fundamentally important to understand and appreciate. In the world of advertising, and I've been there for many years, 30 and more, we've seen disruption all the way through, first through through search and Google, and then came Facebook with social, then came Amazon and disrupting in commerce, and now connected devices has not yet picked up completely, but it will be another disruption in marketing. And the phenomenon that we need to understand here again is that the control in terms of the relationship with the end consumer is in the hands of Google, it's in the hands of Facebook, it's in the hands of Amazon, and it is not in the hands of P&G, Unilever, Toyota, or whoever. And that is the biggest fundamental issue all these marketeers have, because when they are looking for growth, they're actually, the means to get to growth are actually very difficult to find. And this is where we are placed perfectly, because in content allows brands now, it gives them literally a new and fresh canvas to go into any kind of content where they can place themselves and relate to customers and consumers in a very, very direct manner, where they actually can control, the messaging and all these things. And so what we're looking at here, apologies, is really an opportunity that spans in the horizontal way across entertainment, but then when we look entertainment content, sorry, when we look in the vertical manner, it goes across music content, it goes into influencer content, sports content, live action, gaming, VR, AR. And so the canvas from our perspective in terms of the opportunity is just absolutely enormous. I'll do this slide very quickly in terms of how the data are really speaking in our favor as to how we are really transforming this equation again, or putting things back in order, if you will, because the advertising experience that we provide, and you see the numbers for yourselves, is really outstanding, and it's off the charts if you compare it with the traditional advertising. There's, in fact, we've just found in a research that there's a 6 times preference over traditional television advertising. So our format is definitely superior, and as a consequence, as you know, the value for the advertiser is enormous, off the charts again, even when it comes to consumption and purchase. So we now have proof also that we are lower funnel technique in terms of really delivering results. And you translate all that, or we translate all that into really an advertising solution that is hyper attractive for the content owners, especially in the streaming world, because we guarantee great viewing experience, great results for the advertisers. So that is obviously a fantastic revenue opportunity for the content owners as soon as they start monetizing the inventory that we bring to them. From a platform standpoint, you're aware of how we work in terms of we ingest the content, doesn't really matter what it is, from linear platforms, so broadcasting platforms or streaming platforms, doesn't really matter. It runs through our engines. We analyze it for inventory opportunities that are contextually relevant. The inventory gets sold to the advertiser. We do the embeds and push the transformed content back to the owner. That's it really in a nutshell. It's way more complicated, of course, than as I've just described it, but the principle always remains the same. And where we're accelerating is literally all the features and the intelligence of our machine learning algorithms and so forth. Protection continues to grow. We now have 20 patents covering really some key areas where we believe the protection is enormously high, very difficult for anybody to really step into our territory. And normally I wouldn't speak about awards, but in this case, so literally a couple of weeks ago, we were awarded Best Native Advertising Platform of the Year, which is actually a really big deal because, it underlines the fact that we are really the big new player, or actually the new player on the block. Now, in terms of the progress we're making against our strategy, you will, or most of you will recall that last April, we embarked on our new strategy, which was all about 3 main things, actually. 1, the markets. So we wanted to focus on the US, especially on the 3 markets in Europe and on China. Anything else is not important. Secondly, we said, we needed to change the go-to-market approach. So we need to involve advertisers and their agencies, who by then at that time didn't really know anything about Mirriad. And thirdly, invest much more into the platform development, in the development of AI, etc. So the progress we're making is actually really enormous in terms of, amongst advertisers and their agencies. We are becoming more and more a household name, and that is really helping us because there's concrete interest from the advertisers. It's helping us as we negotiate new contracts and build partnerships with the content industry. So that has really been the pivotal moment we had. That was the assumption of the strategic shift, and it's starting to work out really well. The other thing that is happening now on top of the developments of these partnerships is also that that basically not only the traditional content companies, so the broadcasting or the streaming companies or the big, the giants in the entertainment world, but also the film producers themselves are waking up to the opportunity and starting to sign contracts with us. And we'll talk about this in a second or in a minute. The music industry, that is really becoming a huge opportunity for us. So just talking about 3-4 things that have happened. Number 1, you will have seen that we signed a contract with a major player in the United States. As you know, There are 7 big companies that we're targeting in terms of signing contracts with those companies. To repeat some of the names, this is Disney, Viacom, CBS, AT&T, Warner. It is NBC, Comcast, or Comcast, NBC. It's Netflix, Amazon, and Apple. Apple we're always excluding because they're not interested in advertising. So we signed with eventually the most renowned of these companies and starting to work on their inventory. We have a couple of shows already that we're taking to the market. And this signing for us is absolutely critical, of course. That's why we've put a lot of energy into it. Because it's the step change for us in the US. Suddenly we have inventory that is, premium with high reach and so forth. So there's a direct revenue opportunity, especially as we expand also across more content into the streaming worlds, etc., which is all part of the framework contract that we have with the company. Number one. Number two, also it is a signal for the entire market in the US. Now that we've signed with this, eventually the best of the best in the market, that is obviously creating a domino effect now with respect to the other companies that hopefully will follow suit very, very soon. And to that point, we are in very good discussions now with another 3 companies. And I'm actually personally quite hopeful that within the next 6 months, we should have another partnership in the market. I can't promise, but it's looking quite good. So that's that. In China, the progress with Tencent is really good. We lost a lot of time, admittedly, through COVID. We lost time because of the celebration last year of the Communist Party's anniversary, where there was no entertainment content allowed. But fact of the matter is that now Mirriad has become a central part and a very natural part, actually, of the advertising proposition of Tencent Video. We are, in their sales collaterals. When salespeople go out into the market, they talk about in-content advertising, just like they talk about the other things. And actually, it is the head of sales of Tencent Video. This is 2 months ago. She was speaking at a conference and really talking about, the in-content video opportunity or advertising opportunity as being the future in advertising that we, Tencent, already have on board. And that's obviously great to see that we play this very prominent role. On that note, then, we've how can I say, we've signed up, or they've signed up many more advertisers this year. And that's overall just very significant for us to understand that, after a ramp up period, and the sales teams coming on board, we become part of the proposition. That's really where things start to scale and to develop properly. So we're very, very confident in terms of the maturity of that relationship. I forgot to mention that, and that's maybe a good segue, that also technologically or technically speaking, the integration with Tencent is progressing very well. We are, there's a data exchange underneath that is happening automatically, and that leads me to this slide here, where just from a platform and AI development standpoint, we've really launched something very significant a couple of weeks ago, which is called the Scene Finder, and think of it as really the next generation in advertising targeting, because now what this does is it would allow, let's just say Magnum from ice cream from Unilever to use our system to scan any kind of content and understand, where are beaches, sunshine, and happy people, because that's where Magnum should appear. And basically in a matter of seconds, our system can identify or surface all the inventory that is available and matches these criteria. And that is actually really very decisive. We're calling it the brand algorithm, and that reflects the ambition that we have, that for the in-content advertising ambition in terms of us being the leaders in the market, that is sort of the key piece that we need to have and own. And Tencent, will be connecting into our system to leverage this in Q1, Q2 of next year. And that will allow them to really package all the inventory that they have for their respective customers, if that makes sense. So that is a very, very big development from our end, and a very decisive moment in the development of our company. I spoke about music, and that has been a big thing for us to develop and to launch. And factually what it is, it's really the first time that we're bringing to the market, but the first time in the industry that advertisers have the possibility to book their messaging, their products, etc., and place that into music-related content, which is ultimately it's music videos running on YouTube, Vimeo, etc., or it is social content being published by the music artists. And I'm saying it's really the first time because in the past or until now, the only thing that advertisers could do is to basically go from one artist to the next, to the next, to the next, sign endorsement deals, and basically, somebody would wear a Nike t-shirt or stuff like that. But that is actually really cumbersome and very difficult to scale. And what we're bringing to the market now is really a possibility to say, like coincidentally, Italian car manufacturer saying, we're launching the electric version of our blockbuster model. We would like to run a campaign to target millennials. We want to run that between February and May of next year in these and those markets. And that out of the inventory that we have access to, we would basically plan and deliver a campaign to them. And that is again, is a completely new way to look at all this. It has instantly quadrupled or whatever, even more than that, the inventory that we have available and we can bring to advertisers because we have access to the content of over 1,000 artists already. And so for us, this is really a fantastic new opportunity that has completely elevated our stature in the market. And many brands are already after us in terms of really asking us to prepare campaigns. So we're RFPing, etc. So it's actually quite imminent that we'll be signing some first deals. Without further ado, I will now run a quick video that will hopefully paint a good picture and give you a good sense of what is going on with the music proposition and how powerful this actually is. Okay. The one thing I'd like to add, forgot to mention that, is that the music proposition, because we have deals with the artist management companies and with the record companies, in this model, it's actually us who are taking the inventory to the market and selling it. So if you just remember in the, let's just say in the legacy or traditional model, which is not going away, we are partnering with, let's just say, Disney, and Disney is ultimately selling the inventory to P&G, and they're giving a revenue share to us, or a share of the revenue to us. In the case of music, it's exactly the opposite. We are selling to P&G the inventory, and then we're sharing back a part of the revenue with the artist management and the record company. And that obviously, needless to say, gives us a much bigger weight now in the market, because we are actually the owners, so to say, of the inventory. We have a certain flexibility in terms of the pricing, how we adjust the margins and these things, and that will allow us to create, I'm very hopeful, also new deals with eventually the agencies or clients, ideally buying some bigger bulks of inventory directly just to reserve that in certain music genres and so forth. So this is a very interesting new perspective in terms of where we're taking our business. So in the context of the capital raise and why we said, we need to be investing now, it is when I look back the last 12, 16, 18 months, it's been really a very, of course, as you would expect, a very rough and tough period, because we had to just get this market rolling and create the opportunity. And we've been extremely cautious in terms of making the investments at the right moment in time. And again, as you will remember, we changed the team in the US to accelerate the development there. We invested into the technology, and that's basically it. We were very rough or tough on cost. And so now, as we have prepared this opportunity with music in the market, in the US especially, is really the time to go and accelerate and ultimately go after the leadership that we have prepared for ourselves. So this is really why we're saying the moment is now. And the other one is just from a tech side, and that's really important also to mention, that through some very good relationships with a major advertiser in the US who's very engaged in sports, NBA, NFL, and these things, we have the opportunity to basically develop the live and real-time version of our technology. In other words, giving the possibility to create branded experiences in live content in real time. And so we're developing that technology against that opportunity, which is fantastic, of course, because in a way you could say we have a paying customer. But ultimately the investment that is required there is really important, because it will also allow us to evolve Mirriad into the realm of real-time and real-time exchange, which is not around the corner, but obviously we need to get ready for that. And so that is another part of how can I say, the importance why we need to really accelerate and invest more. So on that note then, what we said is that the bulk of the investment is really very growth targeted in terms of boosting up, our sales capabilities, especially in the US and especially around music. So that's the one thing. Accelerate and do a little bit more in terms of marketing and research. And on the other hand, the big bulk obviously going into the technology part, and here especially into the build of the live version of Mirriad, which is a total game changer. I mean, we could spend 1 hour to talk about what the live opportunity really entails, but from my perspective, that is really the monster new opportunity for us as a company. So here we go. That's really where the bulk of the investment is going. And so, we're coming to the end. Just in terms of the highlights and as a summary, we have made very substantial developments. We've signed, especially the tier 1 company in the US. By the way, we have signed many more partners in the States. We have a couple in the pipeline and getting quite close. So this is all a very positive trend. I think the maturity with Tencent is also very significant to acknowledge, because we have this level of integration now and becoming part of their stack. Music Alliance as a fantastic new opportunity that is absolutely compelling for all advertisers and all agencies in the world, because music is just the thing. We have high demand from multiple big advertisers. You could say the who is really starting to not only wake up, but actually really listing us as one of the solutions to consider in their future media plans. From a performance standpoint, we're delivering the growth that you were expecting us to deliver. We've managed well, always managed well on cost, trading in line with the issued guidance. So on that side of the equation, we're good. And just maybe a word to COVID-19 and the pandemic. It's really it's a bit cynical to express it that way, but it has factually accelerated the need for Mirriad in a world where people are getting more and more conscious of what value for time means and how they're consuming entertainment, etc. Their willingness to pay for in-home entertainment, and ultimately this whole trend into streaming and away from eventually at some point from the Googles, Amazon, and Facebooks of this world, who are coming under scrutiny for multiple other reasons also. It's just something that is playing very much in our favor. So that's for the presentation part today. Alex, do you want to ask some?
Stephan, yeah, no,
Yeah.
I'll take you through the questions. Thank you for that presentation, and nice to hear such a positive story, and we look forward to continued growth. Just as a reminder, if you would like to ask a question, please type that into the Q&A box at the bottom of your screen, and we'll try and get through as many questions as we can. So let's start with the questions that we've got in already, and the first one is on the cost base. So you talked about the raised proceeds enabling you to invest in sales capabilities, re the Music Alliance and the technology teams, re live programming and real-time advertising. What are your expectations as to how Mirriad's headcount and cost base evolves next year and beyond?
David, do you want to take that, please?
Yeah. So I think we've outlined the areas that we're planning to invest in. So that is in additional tech staff. So they would be based out of London, which would allow us to build our live solution. So our current plans for about additional 20% increase in our tech staff in London. And then we've said the other area for focus is obviously in the US, where we're looking to augment our sales staff. We have a relatively small team currently in the US, so we are looking to substantially increase that. And we're also exploring potential models to work with third parties to allow us to accelerate sales capability faster. So we'd be looking to add at least 4, maybe 5 people in the US to our existing team of 2. So you can see it's quite a big increase actually in the resourcing, and that's all about driving these additional revenues.
Okay, thank you. Second question here. Mirriad has now got a market cap of over 130 million and revenues are about 2 million. At what point will you be comfortable in issuing guidance for 2021 and beyond?
Mr. Dorans?
Another one for me. I think this one's a really hard one actually, and interestingly it came up a bit on the roadshow with some of our big institutional investors, and a number of them saying actually they weren't expecting us to put guidance out, and the reason we've been really quite reticent about guidance is we do have some revenues which are contracted, particularly around the Tencent contract, but a lot of the revenue is dependent on the orders that we get from the customers. And that means it's quite difficult for us to predict going forward what the revenues are. And because that pattern is unpredictable, so over a longer term, we can say this is how we think the growth trajectory is going to look, but this precise pattern and how it will land 6 months by 6 months is quite difficult for us to do. And we're very reticent to put out numbers that then, everyone in the city is then looking at. And if we happen to miss it a bit, it'll be very detrimental to shareholders. So we have been quite reticent about doing that. I think the best thing I would suggest for investors and prospective investors is to look at the research that's put out by our brokers. So I think people will be aware that we moved brokers from Numis to Canaccord earlier in 2020, and we've had a fairly steady set of research notes put out by the Canaccord analyst Kai. And obviously they're Canaccord's forecasts, but everyone knows on this call that we will work with Canaccord to talk to them about how our internal models look, and although it's their view, we will have had a look at it. And so they have put guidance out for 2021 and 2022, and so I would urge people to look at their guidance and say yes, if there was something that we didn't really fundamentally agree with, we would obviously have talked to them before they put that out. So I think that's the best way, but I'm not anticipating that the company itself will put out any particular guidance for 21 at this stage.
Thank you. Looking at the music partnership, you announced the music partnership back in early November and seemed very excited about the potential of the music business. Is it working out as planned? And can you mention any artists who have started using Mirriad?
Yeah, so so working out as planned. I mean, that we had campaigns about to be booked, and then came lockdowns in Europe again, and that was it. So that was a little bit of bad luck, to say the least. But anyway, in the US, we have RFPs out there. So as I said earlier, there's, you know, a very good likelihood that there will be a conversion coming very soon. We tested with the music industry in the summer during lockdown. So if you're interested, you could look up a very small and sweet video from an Irish band called Codaline, the song called Say Something, and you might spot an advertiser in there. But other than that, I mean, currently, and things would have worked out eventually, we were underway in Europe with I guess 300-400 artists and some very famous names such as David Guetta, who some of you or all of you will be aware of, who's doing a big you know, New Year's or was planning to do a big New Year's show. Anyway, these things have just fallen over the cliff, both sides, because the organizers are not playing and because the advertisers have no interest, because currently it's just rough to predict any kind of sales and so forth. So we have Khalees, but the question for artists is kind of, you know, I'm slightly hesitant in terms of, centering around specific names. I'm just giving you examples, but eventually I could also say Jennifer Lopez and Bruno Mars, and I don't know if Billie Eilish, but anyway, we have through the agreements and the relationships we have with the record companies and some of the biggest artist management companies in the world, we have access to, you know, not all the who is who, but a significant amount of, you know, the platinum level major artists. That all being said, the concept or the approach and the strategy of the Music Alliance is not to go for, you know, one name and that's it, that's what we sell. But is actually to really get brands into investing more into, you know, music, just more as a platform, which would then encompass some of the platinum artists, of course, but also young up and coming who can contribute not much more, that's maybe a wrong term, but certainly very significantly to the credibility of brands. And so that's really what we're putting forward. And we have a tiered system, again, platinum and 3 other tiers, where we're really packaging artists together and putting them forward to the brands. And that's really the strategy that we're pursuing, which is very much being you know, applauded by the industry, as you will imagine, but we're also seeing from the agencies and the clients' feedbacks that this is a very, very new and very compelling new proposition. Anyway, I'll leave it there. I could talk for a long time here in terms of every brand is also looking at it slightly differently, as you will imagine. But they are very big, to come back to the question, there are very, very big names in there.
Thanks, Stephan. I guess we'll look for some updates on that as we go through into 2021.
Yes, definitely.
Looking now into China, have any of the advertisers in China renewed their campaigns with you? Yeah.
So there's, I mean, I think I did not mention that we have like 50, 60 advertisers now who have run campaigns. Hard to quantify. Is it 10%, 15% who are starting to renew? Maybe more importantly is now to see that, to know that Tencent, the sales organization, is really pursuing a blockbuster strategy in terms of trying to get major advertisers. And I think that answers the question nicely, because that's their focus now. Major advertisers for 21 book, you know, major campaigns or block major budgets for the in-content advertising opportunity. And that, I think, is also the better strategy, because their view is, I totally agree, or we totally agree with that, is to go for the market leaders or for the big guns in each and every industry. So think of it, cosmetics, luxury cars, etc. You get the point. And to really get these major, or 1 or 2 major advertisers from every category to book, you know, or to commit to major budgets for the entire year, and that will create the recurrence. And that is an excellent development. You could say, well, you know, could have happened earlier, and I would agree with that, but we definitely lost, you know, half a year in terms of the ramp up because of COVID and all the things that I mentioned earlier. But now we're at that great point.
But a couple of questions here which are related, so I'll ask them together. It's about the tier one client in the US. That one is a straightforward question, which you may not be able to answer, which is, can you tell us who it is? And it sort of develops from that, which is, how will the product be used with this client, and what is the path of progression with this client? Mm-hmm. I guess linked to a question we had in ahead of time, which is, although early days, do you believe the client could be a significant revenue generator for the firm?
Oh yeah, I mean, let me just, and David, please jump in anytime, of course. I mean, yeah, we are not allowed to say who it is. You know, we can give you some hints. Honestly, I mean, it is the dream company, right? It's the company that has always made dreams of little children and families and adults come true. That's all I can say. You know, if you had a wish list, then you probably would pick that one. All that being said, you know, the trajectory for growth, and this, by the way, is a company that has approximately 7 billion annual advertising revenues, right? Traditional. And so obviously our thinking is, well, let's start progressing from, you know, 0.2, 0.3, and then eventually in the second year or third year, double it and so forth. So that's where we're start to get our heads around. How this thing works is ultimately that the company is clearing more and more shows or more and more content areas and making them available for in-content advertising. Again, these are things that just have a very natural progression. And the ambition, of course, is also to, at some point in time, to get into their streaming services. And they have a couple of them. And so we're not there yet in terms of the conversations, but that's what we're working with them on in terms of, you know, our relationship with the commercial teams of that company. And will it be a major and significant growth contributor? Yes, for sure. Without any doubt, because the content that we are now bringing to the market, and I had sort of this not epiphany, but this moment where literally after the signing, a week later, we had a proposal for a big cereals company in the US on the table, and seeing the inventory there suddenly with that very renowned show just was a total step change. And so we're running a first campaign in December. For that advertiser, but there's obviously much more to come. So I can't speak in numbers, but that is obviously one of the big growth contributors.
Brilliant, thank you. Is there one catalyst that you believe would make the industry sit up and think, I need to use Mirriad now?
Yeah, I mean, actually a really good question. I've never heard it that way. What is starting to work is basically this, what we've always said, we need to turn the chicken and egg situation into a upward spiral, right? And chicken and egg was, there's demand, but only if we have supply and inventory, and vice versa, right? And now we're starting to unlock that. And so, you know, it takes a couple of major agreements in the industry on the content side, one of which we now have, okay, and that will have an impact. And also on the advertiser side, where, you know, there's some very, very promising relationships in the making with major advertisers. And that is, I think that's a true catalyst, because then at that point, then, especially in the US, we will be getting, you know, scale in terms of what we're doing, and it will just have this massive aura in terms of in the industry, and sort of starting to be seen as an industry standard in terms of the format that we provide. So in a way, these reference points are certainly a catalyst. From a worldwide perspective, I would say that of course the adoption in the US is a catalyst per se, and we're seeing that you know, literally between, you know, today and 12 months ago, the quality of the discussions and how the agencies are leaning in and the clients, it's just a completely different game, because last year we were still talking a little bit about the theory of Mirriad and trying to explain where it's taking them. And today it's actually becoming more and more a business reality with massive inventory opportunity, with real numbers and so forth. So, and that is the other catalyst, I think. It's just, you know, the impact that we're able to deliver and the results we're able to provide. That's another great catalyst. We've seen that with the big FMCG companies. In the very moment they saw, oh, Mirriad or in-content advertising with Mirriad can drive high-frequency consumer groups from whatever, 40% to 69%, or actually the number was even higher. That's where, you know, the big Nestle's and P&G's, they wake up and they go like, wow, these are numbers that we haven't seen with any other media proposition, right? So that's the one thing. Music is another catalyst. The other catalyst will be live, without a doubt. I mean, the possibility to apply the Mirriad solution or Mirriad magic into or onto live signals and streams, that is a very big game changer as well.
Okay. Obviously, you talked about a lot of areas there. A question here that says, why do you not compete in video game advertising market?
Yeah.
Is it something you've looked at?
Yeah, we're constantly looking at all these things, just to be very clear. I mean, the way we are looking at our opportunity or the in-content advertising opportunity goes across the full spectrum. Gaming is, you know, and we've been talking with some companies, we've been approached by a couple of companies who want to actually join us, not from a corporate standpoint, M&A or stuff like that, but literally participate because they see that we're very strong in the market, you know, and taking solutions to major clients and so forth. But the gaming part, I mean, we're looking at it at some point. Eventually, we could make a move there. But we'll need to look at exactly how we do it, right? There's this technology side of it with gaming engines, which is very interesting. And then there's the commercialization side of it. There's companies like Bitstack and so forth, but then there's other companies who do the marketing themselves. So we need to find exactly where the point is. We've been in discussions already in the area of AR and VR, which is another very interesting one. And the one piece that I did not mention is actually commerce. In other words, the concept of content to commerce, which is already being applied, not at scale yet, but in certain instances in China with Tencent, where ultimately you can click on the content that you're watching in the video and it takes you to, or takes the viewer to a commerce site or whatever activation area. And that is a very, very interesting space that eventually, you know, when we think about big growth opportunities, music, big growth opportunity live, commerce is eventually even bigger than gaming, because that's the space where if we just imagine clicking on any kind of content that we're seeing and having the possibility to buy that at that point, then it's the competition to Amazon. So anyway, but gaming is definitely on the radar.
Okay. It's a question about sort of individual image rights. So how does Mirriad expect to manage image rights of the individual artists, or in time sports stars, etc., versus at a group management level? For example, even though Kane's agency has sold advertising space in his videos to a panel of brands or ad agencies, he's not going to want to be associated with Adidas, for example. There'll be artists who simply do not want their music platform to be used for advertising. So how do you manage that?
Yeah. So let's talk music first. So the principle in music, there are two things I'd like to say. Number one is that we're working with the record companies and the artist management companies. And the artist management companies are very important to have on board, of course, because they are the ones that ultimately supply, or not supply, wrong term, but basically ensure the buy-in from the artists themselves. That being said, it's an opt-in principle. In other words, if an artist, you know, doesn't want to have any advertising, then he or she is not part of the alliance anyway. But an artist might say, I definitely don't want to have alcohol and cars, right? And then basically not opt in for that, but just opt in for fashion and luxury and cosmetics. I'm making up something. So that's the principle, that basically as the management companies supply the release dates of the artists and when new videos will be uploaded on YouTube, produced and uploaded, they also give us the information what kind of advertisements will be appreciated or allowed and which ones not, right? So that's the basic principle. In the sports area, we are clearly working with the leagues themselves. So think of it as NBA, UEFA, etc. So basically the original holders of the rights, and then it cascades through from there. And there is, of course, there's limitations, because if, let's just say, UEFA is being sponsored by Champions League sponsors like Pepsi, then for sure we can't bring Coca-Cola in there, because that's counter their contract. So it will be extensions for Pepsi and all the others, and eventually bring in customers or sponsors or advertisers who are not part of the UEFA and are not competitors to the ones they have. When it comes to the players, that's actually a really good point. We have to ultimately follow the rules of what the league is telling us. And literally that question is bang on, because this, as we speak, this is being discussed with one of the big leagues in the US. And we tested yesterday in London, the technology, first version of our MVP. So that is a critical question, and the league will tell us what we're allowed to do and what we're not allowed to do. And that, for the beginning, is as far as we want to go, because going into ultimately then engaging with the players themselves, etc., that's probably a big new Pandora box that we eventually will tap into next year, in 2 years' time, but not now.
Yeah. I'm conscious of time, and I know you've got to go shortly, but I've got a couple more questions I want to just try and go through quickly. So first one is, where do you see the emerging competitive threats?
Yeah, that question comes often. I mean, we are always on like super alert and always, looking at what is happening. Fact of the matter is that to date, we have not been pitching against anybody in the marketplace, which is obviously a good sign. It shouldn't be too reassuring, because again, it is a very attractive opportunity. So, companies will try to come in. It's very difficult to answer the question. The other aspect, or two aspects I'd like to mention in terms of how we're shielding off, and is number one, just from a patent standpoint, we do have some quite significant protection in terms of key areas that are, from my perspective, are very hard to circumvent if you want to do the business of in-content advertising in video at scale. Very, very difficult. Assigning value to a piece of content for the purpose of advertising, that's actually what you need to do. Just as one example, or cataloging, the available inventory is another thing you need to do. So very difficult to imagine how one would do without. The other thing is, and one should never forget that as a company, we have many huge advantages, but one huge advantage is that our heritage is really grounded in the world of cinema and entertainment. And so when you speak with these major players in the US especially, who almost all have their own production facilities and studios, etc., you cannot come in as an ad tech player who just happens to have a nice CGI or something. It's impossible. You need to have the credibility, and you need to have the knowledge and the experience on how actually to do this, so that not only visually speaking, it makes sense, or the human eye doesn't see what is happening, that this has been done digitally, but basically also the understanding that it's contextually relevant and does not, forgive me the expression, trash sort of the content that we're inserting something into. So that is a huge advantage. The other one is not to be overseen, is that we've now built over the last quite some time, very, very deep and good relationships with many, many companies in the world in terms of, advertisers, the agencies, etc. So that in itself is also a huge asset that is not so easy to replicate. And so all the progress we're making with the Music Alliance, with these entertainment companies from a tech standpoint, relationships, it all contributes to the strength of our position. Obviously, we're never absolutely protected. And so we need to advance on pace, on the pace that we have.
Brilliant, thank you. And one last question. Have you ever considered moving to the main market of the London Stock Exchange?
David, I think my answer is yes, of course. And then I'll hand over to you, David.
Thank you. I get the difficult questions are.
You're saying mine's are easy.
Yeah, yours were all very easy. I mean, obviously, we get asked this question, and we've discussed it. And I think aspirationally, obviously, as the company grows, there's an aspiration to move to a main market listing. There's a question really about what the benefits and what the costs are of doing that when we're still at a relatively early stage. So I think that's a question for sort of the future. I think the answer is not now. The increased regulatory burden on what we are a relatively small company, relatively small team, I think would offset the benefits right now. But it's not something we'd say never.
Brilliant. Well, look, that brings us to the end of the time that we've got available today. Thank you to Stephan and David for presenting and answering all those questions. I'm sorry we haven't been able to go through all the questions that have come through. We've tried to get through as many as possible. As you exit today's webinar, you'll come to a short feedback survey. I know management really appreciate your feedback, so it'd be great if you could just spend a few moments answering that. And all I've got to say is say thank you. This is our last webinar for the year, so I wish you all a very happy Christmas and look forward to seeing you again in 2021. Thank you.
Thank you.
Thank you.